Good afternoon, everybody. This is Dan Hussey with ElliotWaveForecast.com bringing you our live training room end-of-day recap. We'll begin today with, I'll come back to those. For some reason, they don't want to. Anyway, beginning today with the S&P 500. Last week, we ended the week talking about how we are going to be looking for a rally in the short term of the S&P. This rally is more so corrective than, potentially looking for new highs from here. We've traded into a 50% short of the 1875.75s here. We also have equal legs resistance that aligns with the open gap from last Thursday at an 1884. From those levels, we'll be looking for that C wave down and potentially into the 1850 to 1842 area, where we are looking for larger time frame, better support that will then take us up to and through new highs for the S&P 500. In the short term, looking for resistance here. It is definitely a better sell. I can't advocate being a really big seller at this time. Excuse me, just clear my throat there. Reason being is that we are still in larger time frame setups that can take us much higher. However, at this time, there is a selling opportunity at 1884s when we close that gap and trade equal legs higher in what looks like a B wave up off of last week's low. Let's move into the yen crosses. Dollar yen is continuing to press lower. Short-term resistance is at a 101.40, then a 101.70 after that. Again, to review the 4-hour chart, we have equal legs up, traded resistance at the 104.20s. Downside targets from that setup take you into a 99.40. Equal legs down, support comes in at a 99.40, and the larger 50% halfway back long comes in at a 99.60. So lots point to the market continuing its decline into those areas, and now we are starting to break prior lows. We're making new lows for the month of May and continuing to hold lower highs as we go. So we are trending lower on smaller time frames down into the support level, where we will look to be better buyers for a larger swing back towards 108 eventually. Euro yen has broken the 50% long and 50% short inside of a range. We're drawing both up as watches because they give us a very good visual representation of the area that this range may consolidate between. We only have 3 legs, 3 down, 3 up, and 3 down, and that is down in 3, up in 3, down in 3 to complete 3 completed legs. This is not enough to call it a triangle or a wedge just yet, but there is the potential to have an A, B, C, and get a D and E wave for a sideways corrective range bound wedge price action. I won't participate on this type of trading until I see that E wave. For now, it's a watch for me because we could continue lower. Equal legs down would take us to the 134.30s, where the next large inflection zone and participation point is for the 4-hour time frame. So we need more confirmation of either sideways in a wedge or down to those levels to participate on a long. Shorts at this time, I don't have much in the way of selling that I would participate on. We can look at an ambush short, which would come in around 141.20. I'm not drawing that up because I don't believe it's a safe trade. Now we're talking that we've broken 61.8 lines on both sides of the market. We're looking for sideways, at the very least, sideways price action. So you can see our dynamics shifting. We are bullish because we are holding 50s now that those have broken inflection zones. Now we're shifting to more sideways chopping price action. Once we get either confirmation or denying of that type of analysis, we can switch over to being short sellers of the euro yen. Excuse me, on the 4-hour time frame. However, we don't usually, you don't just jump from being a buyer to being a seller. Or being bullish to being bearish. There is that often forgotten kind of middle ground of, hey, this can go sideways without any real trend. And that's what we're advocating right now in the near term. So again, 3 legs of what could be more sideways price action, need more to determine more fully, but certainly if the dollar, depending on what the dollar yen does, if it does, tank down to 99.60s, I can make a very good case for the euro yen heading down to 134.20 as well. But that then becomes a question of what does the euro US dollar do, and of course the other US dollar crosses. So there's still a lot of questions to be answered in the short term for that market. The Aussie yen, like the euro yen, looking more sideways price action at this time. Next inflection zones come in at a 93.85. That would be equal legs down, which is now highlighted purple. You can see that inflection zone here that aligns with what is actually a next in the series 50% long, now highlighted purple, at the 93.85, 93.90 area. We traded a full 50% long to its target entry to target. Next in the series, drawn from entry lows to target highs, comes in at that area. Everything off the highs still looks corrective. We don't have a discerning trend. We're still inside prior price action. So this could also become, this could always be 3 legs of a wedge having been formed so far, but we cannot confirm that without the 4th and 5th leg. Wedges, you don't know for certain until you're making that E leg of a triangle. So at this time, we favor potentially push down to the 93.90s, and then we'll see how we bounce from there. Pound yen, a little bit more bullish than the others still holding its 50% inflection zones, haven't invalidated, still has gotten reactions from equal legs. Again, this was a larger triangle and still could be in an A, B, C, D, E wave structure. This could also still only be the C leg of a triangle, and we could carve out a lot more. So there isn't a great safe trade to be had in the yen crosses, in my opinion, right now, with the exception of the dollar yen to the downside. I really like that short. It should go to those levels. I'm short, and if you are still long and free, any of these crosses, hold it. Hold it if you got it. I don't see any great trade setups in the near term. We need a little bit more price action because markets are actually looking a lot more sideways than they did, last week and the week before. But, we're not missing anything. To begin with the dollar crosses, let's go to the dollar Swiss. I had some questions today about this one. We talked about it last week, and it has rallied into equal legs at the 89.50, 89.60 area. The initial first target is a 76.4, and you can see the reaction it got from the 89.60s to the 89 level. Perfect reaction at an inflection zone short. We talked about this level last week. It's a second test of a 50% short at this level. It's highlighted purple, so you can see it at the 89.20s. That level still valid, and this is all in the direction of trading down to an 85.20, which is where there's better support for the dollar franc. So we have 3 legs up in equal legs into 50% shorts. Downside targets are below 86 at this time. So this is the area, if you're not short yet, to be a seller. Keep in mind there is also, from a smaller time frame, there's also a 50% short off the highs here that is holding a little micro, so needs a little bit more to develop off these levels. They've gotten their first inflections off of both of these trades, and you could be short and free with downside targets to an 86 for the 50% short and to an 85.50 for the equal leg setup. Again, all in the direction of an 85.20 better buy below us. Pound US dollar. Again, last week got an inflection off the 167.30, 167.40 equal legs and 50% long. It is yet to be seen if this bounce is going to be constructive enough to take us to new highs, but it is certainly enough to do so. Both these setups produce with upside targets towards a 170 and a 171 respectively. If this is only a B wave up, there is another inflection zone down at the 166.30s, which we'd be looking for equal legs to form, on a bounce. We don't have that type of structure yet to draw that, but it is there. Also, 50% micro longs inside a 4-hour chart here. Look for support at the 167 90s overnight and in the near term to take you up towards a 168.73 target. This is, again, when you are constructive off of a level, you look for then the smaller degree time frame setups to start holding and start trending in that direction. So this would be the hourly chart here at the 167.90. You look for support. If it holds, if that trade gets free, if that trade goes to target, you have good justification for longs having taken over control of a market and now bidding the market up systematically, because what they did on the 4-hour chart is hold an inflection zone. Now you want to see that 1 hour pullback, which would be to the 167.90s. Like I said, you want to see that hold. A good example of just this is actually on the Euro US dollar. You had the larger inflection zone at the 136.40s get a reaction to their first targets. That initial 4-hour candle here, that was it, trading from entry to its first target, almost to the tick on both sides. And then the market pulled back into the 136.90s, and has gotten a reaction off that level. This is precisely what I mean when you want to see that smaller time frame get that reaction and start a trend higher. I'd like to see what happens with the euro at the 138.20s. It's not a short for me. It is a 50% inflection zone, but it's not an area I would sell because we're seeing longs get reactions and they have potential to take you up to 141, knowing that there's larger time frame targets still up there, as well as now this new inflection zone from the 136.50s that traded. So again, I'm trying to put up these lines for where I see the 4-hour charts heading and what the best case scenarios are, and we're clearly bullish both the pound and the euro US against the US dollar at this time, and we're looking at very similar price action off the recent inflection zones. Aussie US dollar, again, broke the full short, and the ambush long is at a 93.07. We're looking for that level to take you up to 94.50 and above. Equal legs down, held into the 92.30s. They got their reactions, and now this level, this ambush long that is now highlighted purple, is the next trade. It could be considered an hourly setup because it's inside your 4-hour time frame, your 4-hour chart, and we're looking for the 93 area as support now to take us higher. Nothing's changed since last week. I'd like to see this head down there now. It'd be equal legs down as well. So good setup here, and maybe one of the better setups you could take, seeing as the Aussie on the 4-hour chart never dipped down as far as the pound or the euro has, and thus is the strongest against the US dollar at this time, relatively speaking, over the last few weeks. That actually pretty much concludes what I wanted to go over for today. It's the start of a new week. We're heading into now the end of month price action, so we have to be thinking over the next few weeks. Over the next 2 weeks, we'll be looking for a new high or low for the market. We know that many of these markets put in a high or low at the start of May, and are now going to be looking to do the opposite of that trade into the start of potentially June. So over the next week, or over the next 2 weeks, we'll be going into the market every day with that mindset. Still lots of good trading to be had here, and potentially some moves now into the end of the month to square away this to square away May, and then we'll go into June, which is traditionally your last month of good price action before July and August set in, when markets are usually more range bound and dead. That may not be the case this year. Lots of markets look like they're set up that they could have a nice summer session, but I don't go into the summer assuming that. I go into it assuming the opposite, because historically that is the case. So like I said, yen crosses are a lot less clear than the dollar crosses right now. There's clearly some systemic dollar weakness across every cross we can find here. Pound, euro, Aussie, Swiss, they're all bearish the US dollar right now. And we're seeing that translate then into the dollar yen as being a very great short, having come off the 102.20 and 102.40 resistance zones, and now selling off down towards that 99.60. That's a driving force holding back the rest of the yen crosses. So we're going to be looking for the pound, euro, Aussie, and Swiss against the US dollar to outperform when then compared to how they could do against the yen, which is why we've swapped from being more bullish against the yen crosses to now being a little bit more conservative, not necessarily bearish, but looking for more sideways price action in the euro yen, Aussie yen, and pound yen. Once the dollar yen finally does bottom, that's going to be the time to switch back into the euro yen, Aussie yen, and pound yen, is they're going to 100% be the better. They're going to outperform the dollar yen to the upside based on what the larger 4-hour structure is at this time. So with that being said, guys, have a great day. Have a great night. We'll see you all tomorrow. We'll be back at the normal time tomorrow. I apologize for the late start today. But this week's looking like, we could have some nice trends, particularly in the pound, US dollar, euro US dollar, and even Aussie US dollar and dollar Swiss. They're all at great setups that we've highlighted today. So if you haven't gotten into those trades, I think there's going to be opportunities to hop in on them here in the near term. And even some like the dollar Swiss are pretty much at levels you could potentially participate at if they fit your risk profile. So long as you're short the dollar franc with stops above 90, I think it's a good setup. Aussie US dollar, looking at that 93 area, as close to 93 as you can buy it, only risking about 25 pips there. And euro dollar and pound dollar, and those little micro 50% backs, these two setups, these two micros, could give you an opportunity to get into small time frame setup using less risk, but get into a swing off these levels for that larger setup. So have a great day, everybody, and we'll be back with you tomorrow and as price action develops.